Hello everyone, this is Mahin Gupta, founder at Liminal. Welcome to the very first episode of the Block and Key podcast. This individual has spent over 10 years teaching people about this revolutionary technology. We have none other than Andreas Antonopoulos. Welcome Andreas to the show.
Thank you so much for having me, Mahin. It's a real pleasure.
To start off the conversation, I have always seen you as an educator first. In fact, in the past, you have often said that your full-time job is to learning how to explain Bitcoin. How is that job going?
I think it's gone well. After 10, actually now 11 years of doing it, I think I'm reaching my retirement phase. So I have to pass the torch, unfortunately, to other people to continue my work. But fortunately, there's so many capable people in the space now, and the technology is a lot easier to use. So I think maybe I can say that I did my job, and it's time to let others take up that job too.
Fair enough. Fair enough. But one thing that keeps bugging me is that you have not been much active around social media. Also, personally, I'm missing your in-person talks. Do you think we will see you giving in-person talk or being part of a conference sometime this year or in near future?
I'm not sure. I might do a conference at some point. I think I'm mostly focused on still teaching and answering questions. So a lot of the work I do is to smaller audiences via video conference, but I might do a conference. I mean, I really enjoy public speaking and having a live audience because it's a completely different energy. And as you probably know, all of my conference talks and public speaking are improvisational. So without a script. So I really enjoy doing that kind of work. But after the pandemic and the reduction in travel, I also realized it's a lot of work to travel from place to place to do live events, and it's quite exhausting. So I'm not sure if I'm going to go back to it, but we'll see.
Fair enough. So, Andreas, you have spent over a decade now in this ecosystem. I think you have been at the forefront of Bitcoin community in last decade. One of my favorite Andreas plus Bitcoin moments was when you ran a campaign for Dorian Nakamoto after Newsweek published a story framing him as Satoshi Nakamoto. You raised, I guess, 50-55 BTC for him. Just to
Yes.
put things in perspective, that was in March 2014, exactly 10 years ago.
Yeah.
Now, a decade is a long journey.
Yeah.
So if you were to reflect on this period today and had to pick one biggest highlight and maybe one biggest low light, what would they be?
So I think the Dorian Nakamoto story is one that was simultaneously rather sad, but also quite hopeful, because what happened there was one unscrupulous reporter kind of framed this mild-mannered retired engineer and brought a lot of attention into his life when he didn't need it by falsely publishing that he was Satoshi Nakamoto, who had nothing to do with it, just a name coincidence. And that was rather cruel. And when I saw that, and I realized how much damage that had done to Dorian's life, I thought, there's really only one way to fix this, and maybe we can raise some money to make things better for him. And the Bitcoin community responded tremendously. So that was kind of an experience of turning tragedy into a community response that brought a lot of hope and big smiles to people, including to Dorian. I think for me, many of the best memories have to do with community, but also some of the biggest challenges have to do with the community around Bitcoin too. They're not technology insights or technology moments. Probably my fondest memories come from my work and travels in South America. For me, I think a lot changed in 2013, the first time I went to Argentina to speak at a conference. And I got to experience an environment of hyperinflation and dysfunctional currency again, which reminded me of my childhood in Greece. And so it gave me a completely different insight into why Bitcoin matters in developing countries. At the time I had got involved in Bitcoin, I lived in San Francisco. I was part of the Bay Area technology scene. And the perspective I came from it was very much a technology thing. But after I went to Argentina, it really changed my perspective. And I started seeing like this is a ray of hope for a lot of people who don't have other options. And that's when I coined the phrase, Bitcoin is for the other 6 billion. To explain the idea that there's this vast number of people who don't have access to sophisticated investments or financial instruments, or even just stable and growing currencies. And a lot of that is because of political failing. It has nothing to do with our ability to deliver technology. It has to do with political failings. So I saw Bitcoin much more politically than I had seen it before. That changed my trajectory in the Bitcoin sphere. It really did. And from that point on, I think that mixture of not just the economic impact, but the social impact of Bitcoin became a very big part of how I viewed it and how I talked about it. So South America and all of my visits throughout South America were kind of the highlights of my Bitcoin career. If there was one sad time, I think probably the saddest and hardest time for me was started in 2017 with the blockchain wars and the block size wars. And, that's when contentious politics came to Bitcoin. And what started as a technical question as to how you handle scaling devolved very quickly into a political question of who should have the power to make these decisions. And the battle lines were drawn around power positions rather than technical merit. And that eventually also spawned the Bitcoin maximalism movement that is a reactionary movement and reactionary ideology within Bitcoin that rejects all alternatives outside of a very puritanical doctrine about how Bitcoin should be and how everything else is simply wrong, or even worse, a scam. I find that distasteful. I'm not a part of that ideology, and I kind of denounce it. I don't like it, and I think it's been harmful to Bitcoin's adoption. That was probably the low point for me, that part of it, but overall, I would say the good memories and the good times far outweigh the few hiccups that I've experienced in this journey.
So should we call Andreas Bitcoiner? I'm sure not Bitcoin maximalist, decentralization maximalist, technology maximalist.
I don't think I'm a maximalist in anything. My perspective is far more pragmatic. So I don't believe in taking doctrinal or ideological positions. I like to think of myself as a fairly pragmatic person with a scientific outlook. When you have new information, when you see changes in people's behavior or the needs of the community or changes in the environment, you have to adapt your positions. That doesn't mean I don't believe that there are certain principles that are very important, but those principles are generally not principles of technology. They're principles of society. So I very strongly believe in the principle of choice and giving people the freedom to control their own money. And I very much believe in open technologies and because those support that principle. And so for me, there is no maximalism there. It's not I don't take any doctrinal positions or ideological positions too far.
Fair enough. Makes sense. So looking at your journey in last 10 years, I think we should look at the journey of Bitcoin also in last 10 years. Bitcoin, you must have seen Bitcoin starting as a nerd project,
Yeah.
and now it's a legal tender in countries. You have seen Bitcoin civil war, as you mentioned. You have seen Lightning Network being conceived, being developed, and being deployed. We have seen El Salvador adopting Bitcoin as a legal tender, and of course creating exposure for Bitcoin in their books. We see ETFs, Bitcoin ETFs now being traded on national stock exchanges. What do you think of Bitcoin's journey in last 10 years?
I mean, two big things jump out at me. I think, first of all, I underestimated the potential it had just as a pure investment, because that's not my field of expertise or interest. And so I underestimated how much attention it would grab in the traditional investment and financial sector. I thought it would be I thought it would be criticized and rejected because it's a system that is difficult to control, and the traditional financial system is all about control. But I didn't expect how it would also be embraced as a pure investment system. I've also been surprised by the sheer robustness and survivability of this platform. Many times through the years, especially in the early days, there came moments when I thought, oh, this could be the beginning of the end. This is a really bad situation right now. For example, when the MTGOX exchange collapsed in 2014. Or was it 2015? I don't remember. And that was a moment when I was like, oh, okay, this is a big enough hit that this could be the beginning of the end. And Bitcoin survived it. And then through the block size wars and forks, Bitcoin survived those. And the challenges from alternative platforms offering a different perspective, Bitcoin survived those, and thrived technologically, and continues to be a very, very robust platform. So I've been surprised by Bitcoin's resilience. Nowadays, I don't even for a moment consider the idea of this is the beginning of the end anymore. I find every little hiccup and every little blip as just a bump in the journey, but I'm quite convinced that that Bitcoin is supremely robust and survivable. So we'll see how it goes, but I think it's an incredible journey, and it continues to prove strength after strength.
Fair enough, makes a lot of sense. But that gives me this question, that in last 10 years, how do we measure success of Bitcoin? Can there be any KPIs through which we measure that Bitcoin is successful? Bitcoin is a money, Bitcoin is a network, Bitcoin is a technology. How do we measure Bitcoin success?
So yes, I think that's a very difficult question, and I think a lot of people tend to measure success using the wrong metrics. I can tell you what I don't think is a good measure of success, which may be counterintuitive, and that is the price. I mean, we're sitting having this conversation, and less than 15 minutes ago, Bitcoin hit a new all-time high. And to me, that is not a measure of success. It's a measure of popularity, it's a measure of interest, but it's not really a measure of success for a decentralized currency system. Its relationship to the dollar is not a really interesting measure of success, although for many people that's become the only one. For me, I think the measure of success is whether it fulfills some of the things that I saw as its early promise, And of course, that's highly subjective, right? I'm projecting my own expectations and my own measures onto this system. I think that's one of the things that you get when you have a very open, decentralized system like Bitcoin, is that there isn't just one measure of success, right? Everybody projects their own expectations onto it. I would say if I go with what I said earlier, which is I think Bitcoin is for the other 6 billion, then the measure of success that I see has its use in developing nations and nations that really need freedom of currency and freedom of financial access to financial instruments, and freedom of commerce. So in those countries where political interference in currency has created decade-long tragedies, putting millions of people into poverty, in those countries, is Bitcoin today available, robust, usable by the people who need it most? And I think it is. I think, in fact, it's gotten better and better and better at that. It's easier to exchange, it's easier to transact, it's easier to use the wallets, it's more available in more places, and most efforts to restrict people from using it have failed, with very few exceptions. So from that perspective, I think it's fulfilling its promises. So I would say the KPI for me of Bitcoin success is, can an average person who is not particularly technical use this to achieve a degree of financial freedom in a country where the currency is broken, fundamentally broken. And on that metric, I think Bitcoin continues to succeed.
Interesting. Makes sense. So, of course, I have asked few people around that I'm going to record a podcast with Andreas, and do you have questions? Of course, I was expecting some questions around Bitcoin scaling. And one interesting question was from Eric Wall. And I'll quote Eric. Hi, Andreas. My main question to you is, why does it seem like you have accepted Lightning as final scaling solution for Bitcoin? The current Bitcoin dialogue is about adding covenants to Bitcoin as the next upgrade. Covenants have the potential of enabling the second layer constructions where you can trustlessly and rather scalably transact with Bitcoin without the need of channels. If it is possible to get rid of channels and move away from things like inbound liquidity requirements, why does it feel like you are not particularly inspired or excited about this potential? I have always loved your views. Much love, Eric Wall.
Oh, first of all, hi, Eric. Good to hear from you. I think, so to answer that, why does it seem that I have accepted Lightning as the final scaling solution? I don't know, probably because I'm not as active in discussing these things publicly anymore. And the last public thing I did in the space was write the Mastering the Lightning book, a collaboration with Rene Picard and Lalo Shintoken. That's simply the last high publicity thing I did, or highly public thing I did. But that's absolutely not the case. It's not the case that I have accepted Lightning as the final scaling solution. And if you look at some of the work I've produced in the past, when I've talked specifically about scaling, and I can't remember the title of the talk, but I did a talk about scaling when back in 2017, 2018, where I talked about why scaling is not something that has a final solution. Scaling is an ongoing process that is a response to changes in demand. And as you create more capacity in any technology system, what happens is you don't solve the scaling problem, you simply create room for new applications that hadn't been done before. And that room will be filled by new applications that hadn't been done before. You know, when you look at the history of scaling on the internet, for example, you go from a low bandwidth text medium to a slightly higher bandwidth for almost instantaneous text transmission around the world. And then you have more scale because it was having difficulties, and that introduced the ability to transmit images. And then the internet was scaling poorly again, and it scaled up, and then people put more images, and then video, and then higher resolution video. And this is an insatiable demand. You will never fix scaling in any technology. So to me, there is no final solution to scaling. Scaling is an ongoing process of adapting to the current needs, and in the process, failing to scale because you've created new possibilities, which create new needs, which you fail to scale to. So the goal isn't to solve scaling. The goal is to manage to fail gracefully, continuously over 25 years. What has the internet done over the past 30, 35 years? It has continuously failed to scale gracefully, not collapsing, just getting painful to use sometimes, but then managing to overcome that and opening the room for more applications. I think the same thing will happen with Bitcoin. And so is Lightning the final solution? No, it's not at all. In fact, in that, I'm a bit of a contrarian, because I would say in 2017, we had a partial agreement to scaling with SegWit, which also in practice increased the block size to 4 megabytes. It's now been 7 years. Could we afford, from a bandwidth and storage perspective, another increase in the block size? Now, that's heresy to say in some circles. And for me, it's simply a pragmatic question. Have computers and bandwidth increase to a point where we could increase the block size without damaging decentralization? I think the answer to that is yes. And so not only do I think there are more scaling solutions, but in fact, I think there are some scaling solutions that people are too afraid to touch because they're politically controversial. They're like the sacred cows. I hope that's not offensive to say, Mahin, but that you must not touch, right? There are certain topics that you cannot touch, and this is simply one more step, right? The Lightning is one more step. Now, what do I think in comparing covenants to the Lightning Network? And again, this is where I will once again say I'm not an ideologue. I'm a pragmatist. I care about principles, but not doctrine. So what's the difference between the Lightning Network and covenants? The simple difference is the Lightning Network is a deployed production capability that exists and you can use today, and it is effective in solving the needs of people. And covenants are a design proposal that is probably quite far from implementation. So when comparing two scaling solutions, I would never allow the perfect vision of the future to interfere with the good enough practical technology of today, right? Covenants don't exist, and Lightning does, and it works. Does it work perfectly? No, but it works better than covenants, which don't exist. So I think we should do covenants, and if we can get rid of channel limitations on Lightning, or if we can implement protocols like L2 that make Lightning easier to implement and less complicated, great. If we can do Lightning and covenants, great. If we can do Lightning and covenants and a block size increase and 6 other things that I haven't mentioned here, we will have to do all of these things to continue to scale Bitcoin over time, and there will never be a final solution. So I'm excited about developments in the core Bitcoin scripting primitives and capabilities. And I think covenants open the door for a whole bunch of very, very useful capabilities. But I will also add a bit of caution there, which is one of the things that we've watched and that I predicted back in probably 2015 is that as Bitcoin gets embedded in more systems, in more backend systems, in more servers, in more hardware, firmware, and software, the pace of development slows down because any change you make to the Bitcoin core protocol has downstream software implications. That means that when you change a core primitive in Bitcoin and you implement that in Bitcoin core, now everything that depends on that, including all of the libraries, the frameworks, the server systems, the production systems, hardware wallets, wallet software, etc., all has to change. Even if the change in the primitives is tiny, the ripple effect through the ecosystem is quite large. So what that does is it slows down the pace of development, because you can't introduce a lot of change without generating a lot of work for other people and a lot of resistance. This I talked about as protocol ossification, which is the idea that over time, protocols become more and more locked into backwards compatibility until you can't make changes to them anymore because it would affect too many things. We've seen this with things like IPv4 on the internet, the IP protocol. You know, we're in an ongoing upgrade to IPv6 for the past 40 years. And I remember studying IPv6 as the next technology in 1993 at university. Let me check. Yeah, it's a bit overdue. And this is an example of the fact that the more widespread adoption of a technology is, the harder it is to upgrade. So to answer Eric Wall's question again, one of the things that I'm concerned about is that the time it takes to introduce a change, especially a significant change like confidence, keeps getting longer and longer. And I think there are a lot of things that we do need to upgrade within Bitcoin. I don't think Bitcoin is finished per se. And while covenants are a great addition, I think we have perhaps a bigger priority for me would be privacy and anonymity in the core protocol. So, you know, I'm excited to see where things go. I think there's plenty of room for development still. But we are running out of time, and so I don't think you should ever take my lack of a statement or cheerleading for a proposal as disapproval, or take the fact that the last thing I talked about warmly as approval of that as the one and only thing we should do. And really, that doesn't just apply to me. Don't we are not prophets, and none of us know where this is going, right? All we can do is observe, express an opinion, and honestly, my opinion doesn't really matter any more than anybody else's.
Hope, Eric, you got a little bit of your answer from Andreas, and of course, you can get in touch with Andreas. And Andreas does this Patreon videos, so maybe you can jump on one of those videos and have a deeper conversation with Andreas.
Sure.
Great. So if we are talking about Bitcoin scaling, then we must talk about Ethereum as well. I remember in 2016, Coinbase founders published a blog post with the title, Ethereum is the forefront of digital currency, specifically saying Ethereum is ahead of Bitcoin in many ways and represents the bleeding edge of digital currency. And of course, in 2016, you famously compared Bitcoin and Ethereum as lion versus shark, saying Ethereum is a competitor of Bitcoin like a shark is a competitor of a lion. You can have two apex species in different niche, not competing.
Yeah.
So after 8 years now, both Bitcoin and Ethereum have made meaningful progress. You have written actually both books there, Mastering Bitcoin and Mastering Ethereum. What are your thoughts on the same, looking back at the past 8 years?
I think in terms of, I think the lion and the shark analogy feels still very relevant to me. Obviously, I'm biased, but I still believe that the actual overlap and competition between those two systems is minimal, because they don't occupy the same application space at all. And so when the Coinbase founders talk about Ethereum as a digital currency, what Ethereum has shown is that it's not a digital currency. In fact, it's a smart contracts platform, and it was never really competing for digital currency. And the reason it wasn't competing, among other things, is because that space is fully saturated and occupied by Bitcoin that does that job very, very well. And Ethereum found a different niche. It is the smart contracts platform. It's a development platform an innovation platform for smart contracts. And Ethereum has dominated that niche very, very effectively. And the two don't have a lot of overlap. And where they have a lot of overlap, which really has more to do with exchanges and liquidity, I think they actually serve each other. So they have certain synergies, which makes it useful to be able to be technically competent in both domains and be able to use both for the appropriate use cases. Now, in those days, I think many Ethereum developers and supporters of Ethereum were trying to make Ethereum take over Bitcoin's role and compete directly with Bitcoin. So, Ethereum is the new Bitcoin. It's the new king of the hill. And they even talked about the flippening, which is kind of a financial metric. When does Ethereum's value exceed that of Bitcoin's? And we've seen that didn't happen. And the reason it didn't happen is because all of the things that make Ethereum specialized and extremely capable as a platform make it not so good as a robust, secure currency. And all of the things that make Bitcoin good as a robust and secure currency make it not so good as a smart contracts platform. Nowadays, you're actually seeing the opposite, where a lot of people in Bitcoin are trying very, very hard to make Bitcoin also a smart contracts NFT token platform. And that is going to fail just as resoundingly as Ethereum's attempts to become a robust currency were. And that's because when you take a shark and you put it on land, it can't breathe. And when you take a lion and you put it in water, it drowns. And you can't make one fit the environment in which it's not suited to. Everything about Bitcoin's design choices make it completely unsuitable for smart contracts, and everything about Ethereum's choices make it completely unsuitable as a robust, censorship-resistant currency. So I still see these as two completely different domains. They don't compete directly. They don't need to compete. And I think they're better when they recognize what their best applications and strengths are and try to focus on those. And I think that will continue to be the case. Ironically, now there's a lot of platforms trying to compete with Ethereum in the smart contract space, and their slogan is often, this is the new Ethereum, faster, cheaper, better. And they're failing too, and they're failing for the same reason, because they're trying to enter a space that's already perfectly occupied, and the features that they're trying to promote are ones that don't really scale that well once you start using them. So I'm still very interested in both Bitcoin and Ethereum, and for different reasons, and I don't see them as competing at all.
Absolutely, makes a lot of sense. And as you mentioned, Bitcoin has occupied the space of digital currency and money. Mm-hmm. I have this interesting question from Gary Lee, a Web3 enthusiast. Okay, what do you think of the term Web3?
Oh, I quite like the term Web3. Kind of as originally envisioned by Gavin Wood. The idea here being that we need a new decentralized platform for web technologies, one that is much more censorship resistant, much more agile, and which has trusted components such as those offered by a blockchain. Has that vision really come to fruition? I don't think it has yet. But I do think it's a very valid vision, and I think there is a need for much more robust, decentralized, and uncensorable web technology, and it's a niche that Ethereum is probably best suited to fill. So I like the term Web3. If what we mean by that is a new decentralized web.
So the question from Gary Lee, a Web3 enthusiast working on payments. Can you explain the game theory of nation states when it comes to BTC adoption? We have seen El Salvador has taken the lead and has taken the strong exposure to Bitcoin. Do you think that some other countries are quietly accumulating?
I doubt it. I doubt that countries are accumulating Bitcoin behind the scenes, although it's possible. And I really doubt that there's a lot of game theory or strategy going on in these things. Because, countries and governments of countries are, generally speaking, very large, not particularly homogeneous organizations with a lot of hierarchy and bureaucracy in them. They're slow to adapt to new information. They tend to choose the least common denominator in terms of innovation, ideas, and risk. So gradually, the appetite for risk as an organization gets larger, becomes the lowest common denominator, right? The lowest appetite for risk that you can find in the organization. Because the incentives are wrong in that style of organization. If you are an innovator and you work in government and you take risks, you will see no reward if those risks are successful, because the glory will be diffused throughout the organization. But if those risks fail, they will point at you and go, this is the person whose fault it is, right? And so I think in general, there isn't really much in terms of cohesive strategic thinking unless you have very small governments or very centralized governments. So, one of the things you see with El Salvador, for example, is you have a small nation, a small government, and in the case of Bukele, a very centralized source of authority and power. Whether you want to look at it as a democratically elected president who got more than 80% of the vote, or a populist who is bending the rules to get his way. Either way, Bukele has quite significant authority and can therefore act without too much oversight and too many barriers. So that's why you see countries like El Salvador doing that. And that would be impossible in a large bureaucratic country. I hate to say it, but that kind of strategy is authoritarian, right? The ability for one person to make decisions on behalf of a nation without too much oversight or interference from others isn't an ideal political situation, let's put it that way. Because, you may like it when they pick Bitcoin, but, that same person has the power to do a lot of other things that society might not quite enjoy. So I'm generally opposed to that. And I don't look at those situations as positive just because they are in effect an endorsement of Bitcoin. I still see that as a problematic degree of authoritarianism. Separately from that, though, as I said, I don't think there's much strategic insight and game theory going on with governments. I think most of what we're seeing in the relationship between governments and digital currencies is reactionary. It's relatively short-term reactionary thinking, and it's often about 5 years delayed from what the technology is actually doing. So what lawmakers are doing is they're reacting to an idea of what Bitcoin was 5 years ago based on a headline that they read. And their reaction is one of little understanding and often very, very short-term in focus. And honestly, that's great. Because that kind of reactionary approach is very easy for Bitcoin to overcome, right? Because it's delayed, because it's technology ignorant, and because it's short-term and reactionary, Bitcoin can overcome that very easily. I'm glad that the governments don't have the time, the resources, and the insight to really understand what this technology is doing geopolitically and strategically, and really try to resist it because it is taking away control from them. If they had that time and resources, we might see a lot more sophisticated resistance against this technology. Fortunately, they don't. And that gives us a lot of room to grow and adapt, because they can legislate at the speed of the pen and bureaucracy, but we can innovate at a speed that is 1,000 times faster. So, they write a law about what Bitcoin was 5 years ago. Meanwhile, we keep moving forward in terms of infrastructure, in terms of innovation. That's what I think about the game theory.
With regards to investment, game theory, nations, I think Bitcoin ETF would be an interesting new entry. Mm-hmm. And of course, that is the hottest subject in the world of digital assets and crypto today. What are your thoughts on the same? How do you see this progressing?
I think it's a double-edged sword, and I've been quite critical of the cheerleading of ETFs, because again, as I've said before, to me, Bitcoin is about the other 6 billion, and these ETFs are not for them. Let's be quite honest. Although it will have some impact on middle class and retail investors in the US at first. We're now seeing some noise about in-kind spot ETFs in Hong Kong that would open the door to Chinese investors. I think that's a slightly better approach, because in-kind ETFs, just to clarify, a cash-based ETF is where you can buy Bitcoin in the ETF, but in order to do anything with it, you have to sell it and just take the gain in dollars. You can never take the Bitcoin itself. An in-kind ETF is where you could do withdrawals or even deposits with Bitcoin. And so I think I think an in-kind ETF is more interesting, but in general, ETFs do not really serve the types of people who I think need Bitcoin the most. The other fundamental problem with ETFs is that they concentrate ownerships in the hands of institutional investors. When you buy Bitcoin through an ETF, you don't own it, you don't control the keys, and therefore you can't exercise economic authority through the ownership of those keys. And there are specific scenarios where that becomes problematic. One example of that would be if there's a controversial change to Bitcoin software that requires all of the various economic actors and technological actors in the system to make a choice to choose sides. An example of that would be a hard fork where you have Bitcoin introducing strong anonymity or privacy at the base layer. And that would require everyone to choose sides. I can't imagine a world in which an institutional investor like BlackRock would choose to hold the cryptographically secured anonymous Bitcoin. They can't. They're prevented by law from doing so. And the power they have of simply shifting their economic activity, measured in the hundreds of billions of dollars, to the chain that doesn't have privacy, because that serves their jurisdictional and legal regulatory requirements. That's a lot of power, right? And so, we say that in proof of work systems, economic owners don't have power, unlike proof of stake systems, but that's not entirely true. They have the power to choose where they direct their economic activity in the case of a fork. And I think that's a significant power. And they don't even have to exercise it. All they have to do is make it known that they would exercise it, and you simply don't have a contentious fork. Nobody's going to throw away their money. So that becomes a problem in the future developments. I don't like seeing so much concentration of economic power in the hands of institutional investors who are really not serving the needs of the other 6 billion. They're the exact antithesis. Now, obviously, it's been good for the price. and a lot of people cheerleading the ETFs are happy enough for that. And this is where the double-edged sword comes, the other side, if you like, which is actually positive. Because ironically, if you're an Argentinian who managed to buy Bitcoin and controls your own keys, and an ETF that you can't use opened in a country that you're not part of, but it pushed the price up, you benefit, right? So in an irony of ways, it does benefit people who hold and control their own keys because it increases economic activity and liquidity in the system. And this is why I think we have to look at this as it's not all good, it's not all bad, it's a bit in between. I do have some concerns, but clearly the markets have embraced this capability, and we're seeing a huge run up because of it. Let's see what happens when we hit the next bump. I think it's also important to realize that so far we have seen ETFs at a point in the Bitcoin cycle, or the investment cycle, if you like, where Bitcoin's been doing pretty well, right? And it's easy to have strong hands when the trend is up and the price is good, right? And so institutional investors are loving this. Yeah, great yield. Volatility at this point of the cycle looks like fantastic return on investment. But if you're familiar with Bitcoin cycles, and you're familiar with kind of that 4-year rhythm, I've been through 3 of them, almost 4 now, then you know that the other end of it, about 2 years after the halving, is the valley of despair, is the abyss of gloom, where you really get tested, where you really start to think, oh, maybe this is the end. Maybe I've lost it all. Maybe I should have sold earlier. And it really takes a lot of discipline as an investor to hold on and believe in a long-term vision. I think ETF investors don't have the stomach for that. And I think they don't have the investment experience in something as volatile as Bitcoin to stomach that. So what I think the real test for the ETFs is not now. I think the real test of the ETFs is a year after we hit the all-time high for the final time, and we start the long descent into the valley of despair. How many of those holders are going to hold on? We'll see. It's going to be a ride, that's for sure. I think we've just magnified the amplitude, but haven't changed the shape of the wave. And if that's actually what's happening, we're going to see a very, very surprisingly high, followed by a very shockingly low a few years later, right? A lot of nerves are going to be tested in this upcoming cycle.
So one thing so again, I also have the similar thesis on this, that of course, if something is good, then there are always pros and cons. But one thing I've seen about this Bitcoin community is that these guys are like crazy hodlers. Like,
yes.
At least before ETF, you see the Bitcoin hodlers charts and everything, then they are like the Bitcoin destroy day is like very low and so on. So do you think that it would be possible that, of course, when the tide turns down and again the prices goes down, these people will have the similar behavior, and maybe these guys will be able to change the behavior of the ETF guys or the traditional finance guys?
I very much doubt it. We're looking at, it's possible that we're going to see a significant shift in the flows of Bitcoin and the ownership of Bitcoin because of the ETFs. And this is what it means to go mainstream. To go mainstream is to dilute your user base. And when you dilute your user base by going mainstream, you get a lot of people who do not have their shared culture, ideology, and belief system of the original adopters. Original adopters of technology are a strange breed. We are not the norm, right? We are not the mainstream. We are the pre-mainstream. And what that means is that our behavior is very different. Our risk appetite is very different. And honestly, early adopters of Bitcoin have been rewarded for their strange behavior because they adopted before anybody else had the risk appetite to adopt such a technology. They were financially rewarded for this. The premium we got, the discount we got in buying Bitcoin before everybody else. But going mainstream means we're diluting our user base. I don't think at all that the principles, the ideology, the culture, the belief systems, the slogans of Bitcoin early adopters, slogans like HODL and all of those things that came out of that culture, will spread to infect the ETF holders. I think quite the opposite. I think we're going to see eventually the mainstream behaviors are going to swamp out or drown out the early adopters. It's a whole new environment where we have to be ready to realize that this is going to be a different experience now that it's more and more mainstream. And so I think people who had early experiences on the internet also understand that, right? I remember when the early internet culture was very, very different to what it is today. And I remember the moment when the internet got flooded with newbies from AOL and other places, and the culture shifted dramatically in a number of years. And the same thing happened again with the web, and then again with social media. So we're not going to keep any of that. That's going to be a beautiful historic memory that we will share for those of us who have been there. But we're certainly not going to persuade the mainstream to adopt our strange beliefs and rituals.
Absolutely.
No, you're just going to be able to say silly things like to your grandchildren, like, I remember the day when I bought Bitcoin at $100 and we would hodl, and they're going to look at you and go, okay, grandpa, whatever.
So I think in our culture, we are going to teach the traditional guys something known as halving. I think the first time. I think the halving is expected in 24 days. Mm-hmm. Now, this is what I noticed. I think this would be the first time when Bitcoin hash rate is all-time high, Bitcoin price is all-time high, and now we have the first time such a gigantic traditional finance exposure via ETFs to the Bitcoin price. And I think this combination has happened first time around halving, and halving has one of the biggest impact around price also, ecosystem also.
Yeah.
Looking at all these factors, what do you think, what would be the impact of halving on the Bitcoin ecosystem, ETF, and overall Bitcoin network security?
Yeah, I think it's a very strange time because you're absolutely right. We've never seen a combination of forces like this, and the very high hash rate and the very high price going into halving. Usually the price bump happens 6 months after halving. This time it started 6 months before halving. And maybe it's just the market has finally learned the cycle and is anticipating that halving is a good thing. Finally, maybe this time we'll get fewer articles about the death spiral and other nonsense like that. When it comes to the technical infrastructure, I think the halving will once again prove to be a nothing, a non-event. It will lead to maybe a 2-era reduction in the hash rate and decrease in the difficulty. 2 eras being 4 weeks, and then it will bounce back again. Some percentage of mining equipment will be turned off because it will no longer be profitable. But if you understand how the mining infrastructure works and you understand how halving affects it, I think it's and perhaps for those who are new to this, we tend to see from the outside mining as being a fairly monolithic system, which is responding in a correlation between pricing and hash rate to decide if they continue mining or not. But the fact is that within a specific mining organization or farm, there is usually not just one generation of equipment. There might be 2 or 3 generations of equipment, because there's an upgrade wave going through the equipment base, right? They're buying and replacing equipment with more efficient miners all the time. So there's this moving wave of equipment upgrades that's happening. At any moment in time, a mining farm will not just have 1 generation, probably have 2 generations of mining equipment with different efficiencies. And then if you look broader and you look at the most efficient and profitable miners versus the least efficient and profitable miners, they have a pretty broad range of efficiency. They can't all get their hands on the newest equipment. So when halving happens, it's not all miners turn off. It's miners turn off their least efficient equipment, maybe, if they don't think it's going to bounce back immediately. And they might even run it at a loss for a bit, thinking that it actually will bounce back. And so I don't think it's going to have a huge impact on hash rate. It will have a temporary impact on hash rate as people turn off the least efficient equipment and then wait to see what happens next. But I think the halving this time is probably going to have a much bigger impact on price. If the demand of ETFs continues and in 24 days you have a halving of the supply, that's going to create a very abnormal for traditional investors price shock experience, short squeeze if you want. It's gonna behave in a way they've never seen anything behave before, because no other ETF that is traded at the moment gets a 50% reduction in supply in a single moment. It's not natural, right? That's an artificial system, and ETFs have never experienced that before. Yeah, I mean, it's going to be a wild ride. We'll see how it goes. I don't think the infrastructure is going to change at all, but I think the price might go wild. And by the way, that doesn't necessarily mean it's going to go up, right? That kind of shock can create extreme volatility in either direction. You might see a roller coaster ride.
So, do you have a Bitcoin price prediction?
No, I never do Bitcoin price predictions, because I think, first of all, it's not the most important metric, but second of all, I think it doesn't serve anyone to make price predictions. None of us know where this is going, and I think it's dangerous to make price predictions. I'm interested in the long-term survival of the system, and I can bet comfortably that in 2 years from now, Bitcoin will still be producing a block every 10 minutes.
Fair enough. And related to that, there's another interesting question from Gary Lee. What would it take for BTC to be the savings account of the world, rather than perceived as another risk asset to rotate into?
It will take. I think what's gradually happening is that it is becoming increasingly difficult to find alternative savings accounts. Even now in a high inflation environment and a high debt environment, what we're seeing is that the kind of rates you can get from savings and most traditional investments aren't even keeping up with inflation. And so that's a dangerous situation for savers. And so I think what makes Bitcoin the savings account for the world isn't something that happens in Bitcoin. It's the degrading of the alternatives of all of the other traditional systems of savings that are gradually getting worse and worse in quality and volatility and in actual savings.
Interesting. Interesting. Very interesting. So I have known you from, I guess, 8 years now.
Mm-hmm.
And I think at your core, you are a security professional. I've learned so much about security from you over the last few years.
Oh, thank you.
I have this question from Dhruvil Shah, who handles everything tech at Liminal. In the last 2 years, we have seen rapid progress in the field of AI. The progress is phenomenal and at the same time scary, like deepfakes, Sora, finding exploits in the open source code. I think AI has introduced a new attack surface around crypto security. What are your thoughts on AI and its impact on the security attack surface and security posture for both crypto businesses and individuals?
Well, it's a great question. Thank you, Drupal. Um, I think Drupal is right. AI has introduced a massive new attack surface, not just in crypto, but across the technology sphere and across society itself. I remember about a year ago, I had the first conversation with my family to set up a secret code word that we could use in case they received a phone call from someone with my voice saying that I need money, I'm kidnapped, or something like that, because I realized that it was very, very possible to make deep fakes of someone's voice. And you need smaller and smaller samples. Unfortunately for me, the sample available for public use is fast, but it doesn't really take more than a couple of minutes of conversation for you to create a footprint big enough for someone to create a deep fake. I think that's the biggest risk we have right now is various forms of deepfakes and many of the security assumptions we have. I know a lot of companies still do things like video verification or voice fingerprint, and I think those are dangerous practices. We've already seen, it was a few months ago in Hong Kong, a deepfake Zoom call with executives that managed to get a junior employee to send $26 million to outside accounts and steal it from the company. We're going to see more and more of that. And in traditional finance, you might be able to recover some of that money. In cryptocurrencies, if you are fooled by such an attack, you can never get the money back. Once sent, it's irretrievable. So as a result, I think we're going to see even more attacks in the crypto sphere like that. I think AI is it's a capability magnifier, right? So if you know how to use it, you can use it to enhance your own capability and to become much more capable in areas that you might not have expertise in, or to scale the kind of attack that you could do. And so that is dangerous when, if you like, the social understanding of these threats has not kept up with the pace of development in AI. It's very common when you have technological revolutions that the innovation in the technology outpaces the social understanding, and it takes a while for society to adapt. The problem is, in this particular technology, not only is the pace not slowing down, but it's a self-reinforcing cycle because AI is being designed and implemented by AI. You look at NVIDIA's latest keynote, for example, they extensively use AI in the design of the chips that fuel the development of AI. So that's a self-reinforcing group. And this might be one of those technologies where society doesn't catch up, because as we catch up to each idea, there's already 10 new ideas that we haven't caught up yet, and that pace is forever faster than we can catch up. That concept is called the technological singularity, and it used to be a sci-fi concept. I think we're going to find it more and more difficult to adapt. However, as with many other things, the answer to the bad uses of technology is to make a good use of the same technology. So if you're worried about the security implications of AI, the way you fix that, the way you secure your organization, is by using AI. You use AI to detect patterns of behavior or activity in your systems that a human could not pick up. And so you make your security better using the very same tool that attackers are using against you. So it's a classic arms race, right? Security companies are going to need to develop their AI skills as fast as possible in order to counter the fact that attackers are developing their AI skills as fast as possible. And the only answer to bad AI is good AI.
Very great. The only answer to bad AI is good AI. Perfect. And as we are talking about security, I know for a fact that custody of Bitcoin is very important to you.
Mm-hmm.
In fact, you famously coined the term, not your keys, not your coins.
Mm-hmm.
I have seen you helping people again and again on Reddit, Twitter, YouTube regarding self-custody and how to do it right, as well as explaining them the risk of overcomplicating custody.
Yeah.
Do you think we need to do better in this area? For example, with Lightning, many people use custodial versions due to the complexity involved in the user experience. Very recently, BitKey launched a hardware wallet that has, I guess, fingerprint and a mobile app.
Mm-hmm.
Do you think we have progressed enough in terms of product experience and technological evolution to make self-custody easy for the average Joe, or do we need to work harder on this?
No, I think we've made enormous progress, but I think it's still very, very difficult for the average person to do self-custody securely, and there are a lot of circumstances or situations where doing self-custody securely becomes even more difficult. So I think even for those who do know how to do self-custody, if they are under a lot of pressure, psychological pressure, for example, one of the things that can cause you to mess up your own self-custody is to try to do something with urgency. In traditional finance, if you get money stolen from you, you must act quickly, right? You have 24 hours to report that your credit card has been stolen, or you have 30 days to dispute a charge, or whatever. And that's because those are reversible systems that depend on institutions. In crypto, none of that applies. And so people sometimes carry that misconception with them, and they're like, they see a fake message that says your keys have been frozen, or your account has been opened, or money has been taken from you. And their reaction is to try to do something urgently. And so that has nothing to do with technology. It's about the habits that we have developed, which are habits based on experience that do not fit this new environment. Because in crypto, nothing you do quickly will actually protect you. If your money is already gone, it's gone, and there's nothing you can do quickly or slowly to get it back. And if it's not gone, the worst thing you can do is act quickly. So one of the things I'm trying to do with teaching in these areas is not so much change the technology, but change the practices and ideas of how people behave. This is about behavior, not about technology. If you ever find yourself in a panic, or you're feeling an urgency to do something because you're afraid, put it down, step away, don't do anything. That is the moment to take a step back and say, why am I rushing this? Why am I suddenly standing over a keyboard with my seed in my hand, typing the first word? Something is very bad here, right? Because you're never supposed to do that, but panic is how they get you. So custody is difficult. Self-custody is difficult, not just because of technology, but because of human behavior, and because we're not used to the types of human behaviors you need to learn to do self-custody successfully in cryptocurrency. So What do we do? Well, first we teach. We teach our friends, we teach our family, and we teach our children, because these are skills they will need to learn. Just like, hey, if your credit card gets stolen, you need to call the bank and cancel it, right? And secondly, I think, as to switch it now back to technology, as technologists, we can still do a lot to improve the systems that we have. One of the biggest difficulties we have is that in our industry, there is very little financial incentive to maintain and develop products that either are software products that are available for free, or they're hardware products that carry a one-time price. So you sell a hardware wallet, you earn a one-time price, and then that user is going to use that for what, 5-10 years? But there's no incentive to improve or support that user because you're not getting paid anymore. If you make a software wallet and you deploy it, you have to constantly maintain it, and it's an enormous amount of work, but it's a free product, or maybe there's a freemium product. You're not getting any recurring revenue. So I think switching our mentality and looking at self-custody as something that has an associated service cost, and thinking more of a subscription model. I think there's a huge market for customer support, trusted customer support with your self-custody that charges you a subscription fee to help you when you're trying to do a complicated transaction, someone you can rely on to give you that help. It's not easy to do, obviously, but I think that might provide a lot more ease of use for people. Yeah, it's going to be a continuing effort, and I don't think we're finished, right? But it's worthwhile, because when you achieve control over your keys and you have achieved self-custody, you achieve a level of financial freedom that has not existed on this planet since the ownership of physical gold. And that is a really, really empowering experience as an individual.
Thanks.
It's worth it. It's worth the journey.
Absolutely. I always believe that Bitcoin has given you an option where now you can control things, control your money on your own. And of course, the famous phrase, with more power comes more responsibility.
Absolutely.
Sometimes when I go through these Reddit threads where people are posting their scheme of encryption that they have created around Bitcoin seed security, it just feels painful. And
yes,
sometimes I feel that as an industry, we haven't done good enough so that these people can just run some plug and play solution and it just works for them.
Well, they can, but this is again that aspect of behavior, and I'll have another go at it right now and explain why that behavior is dangerous in this context. In most elements of security, especially when it comes to physical security, one of the things that we intuitively understand is that if someone could predict the path that you have followed, they can follow that path and undermine your security. So we hide things. And so it comes naturally to most people to implement things that are what we would call in the security space security by obscurity, or security by complexity. They think that if they walk down a path no one has walked down before, then they will be more successful because no one can follow that path. And so most people's intuitive understanding of how you do self-custody is buried treasure, right? And the problem with that, and the reason why pirate mythology is so wonderful, is that all of the stories you hear about buried treasure are not about the original pirate going back and finding it. It's about someone 100 years later discovering that the original pirate died before they could dig up their treasure, and trying to unravel the path in order to loot somebody else's treasure. This should be a big hint that this is not a good path for us to follow. And here's the thing. When it comes to cryptography, however, the actual fundamental mechanics of it are very, very different. The fundamental concept that exists in information security, and specifically in cryptography, is that even if someone knows exactly how you did it, they cannot break it. They cannot break it even with perfect knowledge of your methodology. So, and the reason for that is because you're not relying on secrecy, you're relying on the complexity of very large numbers and mathematical functions. And so if you're not relying on secrecy, secrecy actually becomes a problem. If you try to do the thing that intuitively comes to mind, which is follow the path that no one has gone down before, and you bury your treasure using a complicated scheme that's non-standard, you feel this satisfaction. The problem is that what you've done in practice is you've shifted to implement more security than you actually needed by adding these layers of obscurity, but you've actually reduced the resilience and reliability of your recovery without noticing. And you don't notice until you are unable to recover from that. You don't notice that the treasure is lost until your map gets smudged and you can't find it anymore, right? And so this is the problem. The problem is if you go down this obscure secret path, not only can no one else follow you, but you sometimes cannot follow you a few years later because you've forgotten, because you made a mistake, and because you didn't have experience and you chose a path that no one had previously tested for you. When we do standardized security with hardware wallets and seeds and things like that, one of the reasons we do that is because we want to have a very clear and specific path that has been thoroughly tested by lots of people, that keeps you comfortably between that narrow gap of secure enough but also recoverable. And so that if something happens to you or to your memory or your ability, someone else, perhaps your heirs, can also follow that path. Another expert can help you in the recovery. And because you followed the standard path, they can follow it. And the only thing that keeps you secure is the complexity of your cryptographic keys. So in practice, we need to go down the path that has been walked by hundreds of thousands of other people and tested by thousands of experts, not forge your own path. And adding complexity and doing your own scheme is catastrophic in most cases. Most people don't lose money because it is stolen from them. They lose money because of either a natural disaster, a failure of memory, or because they made a mistake because they exceeded their own technical capability without noticing. And so follow the walked path, follow the standards path. Don't try to do DIY security. And again, this is a matter of changing behavior, because our instincts, our cultural understanding, our previous experiences all tell us that that's dangerous, but it's not. It's the opposite.
Absolutely. Dunning-Kruger must be very, very high on this.
Yes, it is. It's one of those difficulties, which is trying to become an expert in security at the risk of your own money when you've never done this before is the wrong time to discover that you've exceeded your own technical ability.
Absolutely. Thanks for your insight. Now for some fun stuff, if you allow.
Sure.
We have a small rapid fire session where we will throw words at you, and you need to quickly respond with one word that comes to your mind when you think of.
Okay.
Okay. So here we go. Satoshi Nakamoto.
Insight.
Halving.
Doubling.
FTX.
Tragedy.
Dogecoin.
Fun.
Ordinals.
Waste.
Bitcoin.
Strong.
Ethereum.
Flexible.
ETF.
Bounty.
Vitalik.
Sorry?
Vitalik Buterin.
Vitalik,
Yeah.
wise.
And last, fiat currency.
Control.
Nice. So Andreas, Liminal is completing 3 years on 1st April. What would you say to the Liminal team?
Well, congratulations on 3 years, and it's been a pleasure working with everyone there.
Your closing comments with any advice for the viewers and listeners?
Yeah, I think I think the motivation that I always have, and I like to communicate with listeners, is don't be distracted too much by the ups and downs of price, right? If you're entirely motivated by price, you're probably not going to have a good experience in this space. For me, my motivation has been learning. I enjoy learning and teaching for the value of learning itself, not with an ultimate goal, just personal enrichment. And I find that that is a beautiful thing about this technology. It provides endless opportunities for learning. It's constantly changing. It's challenging, but personally rewarding. It gives you insights into not just technology, but also economics and society. And it's fun to learn. So if you ever find yourself caught up in the drama or worried about the price or feeling scared about where things are going, refocus your efforts on learning and understanding the technology and doing it just for the sake of your own personal knowledge, and you will enjoy that. That's always back to basics, back to learning.
Awesome. Thanks for your time, Andreas. Really appreciate it. Thank you.
Thank you, Mahin. Thank you for having me on the show. I appreciate it.